Hey, good afternoon, everybody. This is the Professor with Day Trading for Success. We've got an exciting video for you today showing you all kinds of stuff that prop firms use, as well as you're going to get a free indicator. So if you have put on your notification bell and you are watching this video for the next 24 to 48 hours, there will be a free indicator. After that, that will expire. So you just got to keep up with everything, guys. Anyways, there's a lot to cover, so I'll be right back.
Welcome to Day Trading for Success, hosted by the Professor, a professional trader, former math teacher, now focused on engineering advanced systems for trading firms with algorithmic modeling and AI-powered tools, using forward-looking strategies and indicators designed to uncover high-probability opportunities. The Professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, welcome back, everybody. So the free indicator today for the next 24 to 48 hours, so hopefully you have your alerts on and your notifications on and you see this video coming in. If you miss it, you can still get it at the $1 Million Margin Club, but right now you can get this for free. Now, this has been out for a little while. I created it a while ago, and this is your chance, if you don't have it already, to get it for free. So let's go over exactly what it is. This is called the Day Trading Dashboard. I have this here on a 5-minute chart. So when you first get this indicator, all right, which is this one right here, Day Trading Dashboard Space Saver, that will be available on this video, right? You can go into this gear wheel and you can adjust whatever chart time you want to put it on. The only chart time it will not work on is a day, but any of these other chart times in here, you can set it and it will populate onto those screens. So that's one thing to keep in mind depending on where you like to trade. And the idea about this is you've got all this data right in front of you on the chart, preferably on the chart you're taking your trades on. So let's go over exactly what's on here. So on the far left, you have the current volume of this 5-minute candle. All right. And then to the right of that, you have the last volume. Okay. Then these buy and sell percentages, the green and red boxes right here, those are basically telling you the percentage of buyers and sellers based on a mathematical formula. They're inside this actual candlestick at any given time. So let's just zoom in on this just a little bit. So it's going to show you so you can kind of sense what is going on here inside. Now, this is the same stuff that's used in the scalping indicator on a 1-minute chart. It's incredibly popular and dynamic, these two numbers, because like I said before, it's like you're waiting on a surfboard and you jump on your board when you see a wave coming, the momentum of a move, a price move, we'll call it a wave, and then you jump on that and then you ride that wave. And then you jump off before it hits the rocks, before the stock goes the opposite direction that you were trading, in other words. Okay, so that's why those two labels are so important, and they will move up and down very, very quickly. And then now you're getting stuff that would normally be on the active trader, but it's right in front of you. So you've got the buy, you've got the bid, the ask, and the spread. All right, so there's the bid, the ask, and the spread in between. So you can see where you might end up if you're trading markets, what your slippage might be, and then there's the market price. And basically, this really stops you from having to look at the active trader. And I can tell you, in combination with other indicators, this becomes really, really helpful to have it around. So it basically depends a little bit on how you trade, but there's no reason not to have it because it's free right now. But I mean, a lot of traders have purchased this and will continue to purchase this. Now, when you are buying any of the indicators that I create, I recommend you go to the $1 Million Margin Club, because we have seen, Charlie's found other companies that are selling it for 10, 20 times the price, because you should be able to get it for right around $25, no more than that. I mean, they may have a price increase one day, I don't know, but that's what they promised me. Once I started to stop being completely open share, that they would keep it at that price per indicator. And I know they even have package deals where you get one for free if you buy, you know, 4, then your 5th's free or something like that. So you should go over there to their site, their website. I'll have a link to it. But that's what you're going to be able to get today, and you don't have to buy it if you acted fast. I hope you did, because I want you to get it. I think it's a very, very handy indicator. Almost every indicator I create is by popular demand, or I don't even spend the time. By just being asked for. People want it on Thinkorswim. Keep in mind, these are also, most of them are available on TradingView. Something like this can't be on TradingView because it is account specific, right? So it's not going to tap into your account number. But a lot of them are all, actually this one might be available on TradingView now I think about it, because it's not account specific. But no, it is, because it's getting the bid and ask from your account. Sorry, that's confusing. But anyway, check over there. I'm pretty sure I adapted it, but I can't be 100% sure. But anyway, guys, this is what we have today. Now we're going to start with some other cool information you're really going to want to stick around for that should be able to really help your trading. So what we have here is a professional layout. It looks like if you're not used to scalping and trading for a living, if you're not used to fast reaction and needing to know all the information in the moment, then this is going to seem really, really confusing to you, and it's probably not for you. But it might be something to aspire to, because you know that professional traders, particularly at prop firms, you see the information that comes out that they're making $1 million a year, you know, to $5 million to $10 million, even $20 million a year. Now, I'm not saying you can be one of those people, but I am saying they exist. And they use different strategies, which I'm going to go over a little bit with you about scalping, because you don't see me use time and sales much, but I'm going to explain to you, because this is a layout that exactly is a copy of one of the top traders in one of those firms that uses Thinkorswim to trade. So I wanted to make sure it was exactly the same. Now, he will usually adapt new scripts as they come out, and sometimes he rejects them, and other times he gives the ideas for them. But he is one of the top rated and profitable traders. So we're going to look at his layout to see how he does it. Okay, so we're going to start doing that in just a second. We're going to get a breakdown for this whole thing. Okay, let's start on this 1 minute chart. Okay, it looks really, really busy. I think the best thing to do is to open it up. Oh, I don't want to do that. Let's do this, maximize sell. Let's open this up and see what he's got. So inside here, he has your VWAP, or VWAP for some people. The 9 moving average, the 20 moving average is here, as well as the 50, 100, and 200. Okay, and then it also has the market magnet with no labels. So there's when you get these indicators, you can get them this way. It has the new range target risk oscillator, long name for that. The whole and half dollar indicator, the MACD directional surge indicator, the buy sell oscillator indicator. This 14 should be up here. Let's drag this up here. I thought there was a 14, I didn't see. So he also has the 14 moving average. I was copying his thing, so I might have made a few errors here. And then the ATR without labels, so it's on the 1 minute chart, ready to rock and roll. And then this is the dashboard that's up here. And then this is not an available script right now. And then this is the multi-directional indicator, and then this is multi-time alignment. And down here we have 2 different this is also not exactly available, but something like it is. And then the multi-time alignment over here too. So these are all things that are set up on this 1 minute chart. Let's go over them. Let's break them down so you kind of understand a little bit more about what each thing is doing here. Okay, so on a breakdown on this, let's start with your moving averages. Okay, so let me open this back up, and let's see if we can find them here. It's going to look really confusing, guys, so we got to kind of get through this so you can see, because you don't trade when it looks this way, right? So I'm looking, there's the moving averages. Okay. So you see the moving averages here, right? So you have the 9 is gray, the pinkish magenta is the 14 moving average. This is the EMAs, and then the 20. Now, I am going to make this layout available. So here's the good news. But I'm making the layout available. Don't turn off the recording and go look for it. It will not have the custom indicators in it. If you already have these custom indicators, they will load, or you can bring in the ones that are almost like it, and hopefully you know how to add a study, because they're studies. But I thought you might want the actual layout, and you'll see why as we go through this a little bit more, why it might be more important to you to have it set up this way, to how he trades with this to be a certain way, and it does quite well for him, right? So these moving averages will be in the layout that I give you here, but the other stuff, the custom indicators, will not be in it, okay? So let us start with the ATR. You see the green line there? Now, this is based on a specific strategy. I'm trying to get to the red, actually. Let me, where's the red line? There, way down here. So this is based on a specific strategy, right? And it's taking the close of the previous day, and then it's finding what its average true range was, and then it's divided it into 2, and then it subtracts half from the high and the other, adds half to the high and then subtracts half to the low. Now, you don't have to do all that if you have the indicator. And then there's the indicators that show there are indicators with this average true range that would tell you the amounts. He just did not want the labels up there, so this is especially made without the labels for him. And there's just too many labels he wants to look at. But he wants the levels and doesn't want to go through the time to calc them every day for every stock. So they get automatically calced. Now, that's a particular way to set up your ATR. Some people, when they trade, will set the ATR high, the entire range from the previous close all the way up, and then the entire range all the way down. Okay, so it depends on your strategy, what you're looking for. A lot of traders will decide that by looking at not just the last 14-day ATR, but they might go further and say, well, I generally think this goes up 3/4 high, and if it's a bull market, maybe you want to set it higher. Now, why would you want to have a line there at all? Well, it's giving you a range to trade inside that you can feel fairly confident that it should stay in that range up and down as it moves up and down, But also, they become support and resistance levels. And the reason why that is because so many people trade with them. So many people. So now I think that on this one, he has it actually down here on this chart, which is the main, a chart that he doesn't use very often down here. So that's what the labels look like. So that's one of the most important indicators. They're all important that's on this chart right now. So why don't we break into the next one? So let's get into this range oscillator at the top of this 1-minute chart, okay? So what's great about that, each one of these boxes shows you the range of the previous 9 candles. Here's the current. And that's, 2 back, 3 back, 4 back, 5 back, 6 back, 7 back, 8 back, 9 back. So you're seeing sort of the 9 moving average range of each high and low of the candles. And then it averages them. So what it's really doing here is it's giving you, if you've decided this is an upward move, it gives you a target of how many cents to go for. So a stock like this, you might be trading 500 or 1,000 shares. All right, because this is one of those moving, real movers, and you look for a catalyst or news, and you just jump out when you've guessed it the right way. If you've built a cushion, obviously you could stay longer. These are like almost his exact words, and but you just want to get in and out, and he uses hotkeys, I will tell you, but you don't have to. You can push the button. It's just faster to use hotkeys. And then there's the target if you were going short. So it's taking an average. So this is really, really important for scalping, is this information, which is one of the reasons people have just been going crazy for this indicator. It's so accurate. And then here it'll tell you how many cents it's moving. It'll change color. If you've gone long, it'll go green and say there's 3 cents, 4 cents, 5 cents. And when you see 6 cents, boom, sell, and you're out. And then the same thing, it goes, if you're going short, it's red, and then, 1, 2, 3, 4, 5 cents out, or 4 cents out, maybe a little ahead. If it's a really strong move, no reason not to stay in it, but generally, you just want to take these short scalps with the people that are just looking for, 3 cents to 10 cents, in and out, large share size, and making their money, right? So that's what this, and then this is going to give you the overall open. Now, these 3 boxes are not part of that. We're going to talk about those in a minute. But this is the end of that. And it's also, it's the target risk oscillator, right? Because this is going to show you your risk when it's going the wrong way. If it's going the wrong way, you could just get out at the opposite number. Like that's going to be, so it's not going to tell you 2 to 1, which a lot of these traders don't do 2 to 1. It's just a beginning really good way to think about trading. Only risk half of what you're trying to make, and then if you don't make it, half the time, then you'll be okay. But as you get into it more, you're gonna set your profit or loss. I always recommend max loss per trade, max loss per day, and then a number of trades that you would get out, after so many numbers. But this is a scalping indicator that's on Thinkorswim, trying to catch it up with all of those direct access that charge you. So this Thinkorswim, it's free to trade on. So I don't want to go by this too quickly. I wanted to make sure I gave it its moment in the sun here, because it is one of the better indicators out there. I'll tell you the only one that I think is better than this when we get to it, but this is really one of the better indicators. Okay, guys, let's dig into the next one. So because we're on this chart and it's right here, I do think we should talk about this next. So this is part of the dashboard that we're just giving away for free today. But this is a really pared down one, because this is the only information he's interested in seeing, and most traders are in the moment. They don't want to look over at their active trader over here to get the information. They want to look right here where they're trading, because they don't want to take their eyes off this action here. So they're looking right here and here when they're doing this. At the same time, they're just looking like, taking it all in, kind of drawing a circle around these indicators on this chart, and then glancing from time to time to the other indicators to help them make a decision. Usually that's when they're out of a trade and they're waiting to get back in. They're going to glance at other things that are on the charts that we'll go over. But when they're in a trade, they don't want to mess around. They want to look from the scalping indicator up here, and they just want to get in and out as quickly as they can. So that's why this information here is really important to have on your screen: the bid, the spread, the ask. So you kind of know where your slippage could be in here, and you're usually going to be doing the the bid and the ask rather than the market. However, if he's trading large cap, traders trade large cap, and the spread is just a penny or barely comes on at all, then it does make more sense to go in and out market, because you slip at the most a penny and you're picked up, you're filled all your share size, right? So now when you're trading 5,000 and 10,000 shares, that might not be entirely true, which I've been warned about, that you might slip more than a penny. But usually when you're doing those kind of share size, you do have a bigger spread, and you're doing ask and bid. You're not doing large cap, mega cap stocks. So when there's nothing going on, it will flip off from time to time, because there's no spread and the numbers aren't different, is why that's happening. And then it comes back on and does the same. So that's an amazing indicator, and I would definitely add that to my chart if you don't already have it. So next I did a short trade on a break there, 1,000 shares, doubled down and did a quick one on this stock we've just been talking about. And the reason I took that trade is the worst reason in the world, that I was bored. And so I took that trade because I was waiting for something else to set up over here. But I just drew a quick support and resistance line, and I took a trade. But let's go on to the next multi-chart time frame alignment here, which is right down here. So most traders find this indicator extremely helpful. Now you'll know from long ago if you watch my videos, and I was just concerned with the 5-minute chart, which is kind of what gave the idea and a lot of people watching those videos. And when this price action on the 1 minutes came right up here, there was a lot of people that only traded on a 5-minute chart, which is what this is over here, right? So what did they see? Like if you saw 3 reds right here at the end, but it opened up green and you were above that level, they would only see green here. Why is that important? Well, if they're deciding to go in right when the next candle flips, then they may go the direction, assuming they're buyers and not sellers, they more likely go the direction of the candle. So it's weakening right here. So I get to see this, but they don't. So you have to say to yourself, what is the crowd going to do? And it looks to me like this would go, as this flips up here, we have 30 seconds left. So let's see in this 30-second what's going to happen. But you really used to use these vertical lines for every 5 minutes. And that's how the first indicator was, to help me decide when I was scalping, one more thing to look at. What am I going to do when it flips that next candle? What does it look like I'm going to do? What do the 5 minutes see? Well, I'm going to be more long biased because here's the first 5 minute way down here, right? So it's way above that. So most likely this would go up if you were just basing it on this information and look what happened on the multi-chart alignment. All these people jumped in. Now remember, this is really if you're trying to trade with the crowd, you're trying to do what other people do. And what I was about to say, remember that now you think about what are the 15-minute people that only trade on a 15-minute chart going to do? What about the 30-minute and the 1 hour and the 4 hour? What are they going to do? So the increments will be every 5 minutes. They'll fill in here, but you'll know the bigger time frames were now a 5-minute, a 10-minute, a 15-minute, a 20-minute, 25-minute, and the 30 minutes are all together, those time increments. So now it's even stronger when it gets up here. What direction is it going at that level? And then the 1 hour, and then finally there's a 4 hour somewhere far, far away. It's starting to, when it gets so far away, it doesn't, I see that they're black back there, but there are 4 hours too. So I'm just trying to find it here for you. Did I pass it? Okay, well, somewhere in here is a 4 hour. I don't know. Anyway, it's here. It didn't plan that well. But let me, let's see here, guys. Oh, it's not going to let me lock that in. So let me get that straightened out. We'll go into more detail about this. So we're talking to the next one. So we've talked about how we have the VWAP and the moving averages up there. I haven't actually shown them, but they're all in here. And it's important. This is a simple moving average. Okay, these 50, 100, and 200, and they're going to show up on the 1 minute chart. So when you come across those levels, that's pretty important, right? Because that's their day simple moving averages. The 50, the 100, and the 200 are on the day. They're not calculating on 1 minute because that's pretty useless, frankly. But they do show you what all the big day levels are. So you know when you get to one of those levels, or if there's a crossover of these, that's a pretty important level to know about. So having these on your chart, and we'll look at them in a minute, is really important. And then the moving averages and the VWAP. So let's just take a quick look to make sure you guys have seen all that on here. And this is how traders will... let me just do an auto zoom here. Unfortunately, because we have, you can see down here There's a level. Yeah, they're right there. There's the 50 and the 100 on the day. So we're not really, if it dropped down into the $33 price range, that'd be something to look for. And then I think the 200 was down a bit further. Yeah, way down there. So that's down at 26. So you're always looking for those to cross over. So although they might not come into play too much when you're scalping, it's a good idea to have them marked as the day, the 50, the 100, and the 200 moving average. And then here's your VWAP right here. Now I've seen all kinds of trading gurus that talk about the VWAP. There's all kinds of different ways you can use the VWAP, but the most important, crucial way, in my opinion, and from the traders that I know, is you look at it as a support and resistance level. So when you come to it, you're going to think about, are a lot of people going to stop, rest, or turn around? So it's sort of like your live moving historical data, as are these simple moving, these EMAs here. So that is an important level to have. Every trader is going to have your VWAP on your chart, and that's on this chart as well. Now, these are, like I said, on the other indicator, I talked about the multi-time alignment. He has the labels down here, and then he has the vertical lines up here without the labels. It's actually two different indicators going, one without the vertical lines and one with but without the labels. So he gets the best of both worlds. He's seen these where you want to get in and out of those things, but the labels aren't in his way up here. And he's looking very quickly when he's looking at this other action, what is it going to be? What's going to happen with trading with the crowd, right? So now let's talk about one of the other indicators here. Let's go into the market magnet, okay? Now, he also has the market magnet with no labels. You can get a market magnet with labels. Now, the market magnet is based on the volume profile Thinkorswim has already. It uses a lot of the same math. It's a little bit different, and a lot of traders like it a lot better. And basically, with the advent of scalping and using this, traders realized how important these blue bars that come in. So what is this magenta line? This magenta line is the average of all volume up till now. Okay, this is the biggest average, right there, the largest number of volume based at a certain price. It has already happened, so you're not going to get anything that tells you the future, but knowing where everybody went in and out and where the strength was, again, becomes a level to watch to just help you decide whether to go in or get out at that level. These bars you will see them move very rapidly sometimes that come across. That is the most recent price action just happening. I mean, it's past price action still. But when you see, like, if this in this location right here, if you saw 2 or 3 bars coming across, these light bars here coming across right here, there is a high likelihood, since all that buying and selling of volume is above the price that it is right now, that this is going to pull up. You watch my videos, guys. You'll see it happen in real time. And then if it does pull up, it often acts like a springboard from wherever you are. It springs you upward. Not always, just often. And then the same thing happens when this is coming down. Now, if this was moving down here, I would be afraid to continue a long move here. And then these green arrows right here, they're set at a range, this green and this red. Now, the market magnet is specifically set for slower moving, like large cap stocks. It doesn't hurt to have it. Even he's trading a mid cap here. I just duplicated what he was doing. So it still works, but it's not going to move quite the same. But it's set at a 50% range, right? And Thinkorswim doesn't have it set that way. Excuse me. And then it has these arrows pointing down signify when the move is coming to an end, and then the arrows pointing up, an end going up, and then the arrows pointing up here signifies when the move is coming to an end going down. Maybe. So again, everything's a possibility. You can see it did work here for a bit, and then it broke it. It's kind of stayed right at this level, and then it finally broke it. So now you have higher confidence to stay in this move. Now it may pull back down, sort of like in the escalator strategy, and come back out if it was using the ATR. But now you have this stock that's broken the ATR, it's broken the magnet, and it's, the sky's the limit. It's blue sky up here. So you might be watching for news events at this time, if you were a momentum trader like this, to see, is this going to continue? Is everybody going to stay on this? I mean, right now the volume's way slower, but look at it going up. We'll talk about this in a minute. But so that's what the market magnet is here, and that's a pretty important indicator to have. You can use the one that's already on Thinkorswim. You can set it very similarly this way. It won't be quite the same. That's why people are willing to invest a few bucks to just give them one more indicator that helps them decide which way to go. So we talked about all the moving averages and the VWAP. We talked about the market magnet, and we talked about the target risk oscillator here. We haven't talked about the whole and half dollar indicator. Now this is a really, really simple indicator. And when you have it, you can go in and you can move it around. So you would set it at the current price action of whenever you put it in. So if we looked at the current price action right now, we are at roughly, I'm looking for $35.98. So we can set this for $36. Now we'll automatically populate to where the open was, right? But if it's fallen out of that, it's great that you can reset it to wherever you want to reset it to. So he's got this thing set up for hotkeys, and pretty much copied everything. So what is the whole and half dollar? That's what these gray lines are. Every whole dollar and every half dollar, they will populate on any stock you're trading. You don't have to draw the lines. Well, a lot of people don't know about that, the whole and half dollar. Just like when I was talking about waiting for the price action to multi-align with a chart and cross a level here and see which way it went, depending on what the other levels were doing. What we're looking for is constant alignment of things. We're looking for alignment of volume. Is the volume going up in the direction that it's going right now? See how it's going short right now? And the volume is going up as this goes down. And that's an important thing to keep track of. And we'll go over that more in a minute. But the whole and half dollar is where the crowd will trade. Like, you just, in your brain, it's easy for you to remember, I'm going to get in at an even dollar, I'm getting out at I'm getting in at 36, I'm getting out at 36.50. And you might even set it that way on your ladder on the Thinkorswim. Let me just make sure you guys understand. He has the ladder here that he can use, and you basically can just click here really quickly at your price, and it will take your whatever share order you have punched in and just go right in, and you can scan these up and down and then set your sell. So buy, sell at a different level. So that's one way people trade. It's going to be the exact price that you want. It might not pick up all your shares, but a lot of people do that, and that's why I wanted to bring that up. And we talked about that with the whole and half dollar. But you're looking for alignment with this if you can get it. So if this was coming down and the last candle turned green, well, let's look at a past one here. So this was kind of going up and down, and then the last candle turned green right at a level where people might be going in, right at a half dollar level. Also had some resistance here to break through. So you would look at that and you'd go, hey, I'm even more confident now that this next candle, most likely, let's see, so this is the 5 minute, yeah. So this was green at that time. So you would have had a multi-chart alignment, and you would have had a bump off point to go up right here to take that trade. You get, then you'd look at the volume. See, so here's the volume. So it switched from selling, more sellers down here, to more buyers. Although it was low, It was lower volume than the seller, so I would have been slightly concerned, but it's near the top of that volume, and then look what happens. Now I would have really been holding on, and the first time I would have got worried a little bit, it was right here because it didn't make it to the top. And then again, it's still here, you went down some, so that's, you might have got out of your move. Again, you're using this up here to do that too. They all work in concert. That's what these professional traders do. You get it set up in a way where if you look at the indicators, it's very difficult to not make money on the trade. You have to just fight yourself, your own emotion, to believe what you're seeing. It's saying, do this. If something else is telling you don't do it, trust what the indicators are telling you to do and the historical data. And we'll talk a little bit about that too. But so whole and half dollar levels, guys, are so important to always be aware of, and to just put them in the mix of, is this going to go up and is this going to go down? And obviously, I keep talking in confidence like it tells you the way, but anything can go against you. Read Mark Douglas, Trading in the Zone. I mean, count on 20 trades going bad. And just make sure your share size is low enough to handle that. Can you live with that? But if you learn to read these indicators start to practice in a simulator and always have a maximum loss per trade that you would go by. But as you start to learn to read these, then it really can make a huge difference in you becoming a profitable trader. But that is why whole and half dollar levels should be made note of. You can draw them yourself. It's definitely worth getting the indicator, though. It just makes it a lot easier. So my point was, you want to trade with the crowd, and you want to keep an eye on the time increments. Now, with this particular indicator, it's so important because you don't need to open a bunch of other charts. Right? You don't. They're right. It's right there in front of you. Again, everything is in front of your face on this one chart. That's why professional traders set up things, because they need this way on one chart, because they need every bit of edge they can get. Every second of delay is possible losing trade or less profit on a trade. So you want to remember that. See, this is off a bit here. I'm going to go into why these are shrunken down in just a second here. But and there's another one over here. So we're going to go into some of the detail here. So I am making changes as I go along on this chart because I'm trying to get it to the actual way that it is set up and the actual layout that you will get, remember, without the custom indicators. So this is put on this chart. Sometimes you'll see me trade it over here on the 5-minute. I look at it. I mean, it is better to be in your face. I mean, you could put it right up here, but now with this risk oscillator, it can get a little busy up here, especially since he has a version of the day trading dashboard simplified right here, so he doesn't have to look at the bid ask over here, So it depends on what price level stock you are trading, and we'll talk about that a little bit with the time and sales in just a minute. But this is a dynamic, important indicator that now most traders that are aware of it, they are using it all the time. With all indicators, there's a way to get this data without spending $25 for an indicator. But and remember, don't spend more than that because somebody's ripping you off. But do you want to open up all these charts and slow down your your whole platform? Do you want to be looking around at your 6 different screens like I have here? Or do you want it right in your face? Right in your face. That's where you want this, okay? So now let's move on down here. And we're going to, so we've talked about, let's talk about this up here. So there's a whole bunch here that we haven't talked about. I'm sorry. Let's talk about a whole bunch of different stuff here. So we'll go on to the next one now. Let's talk about this MACD directional surge right here. I skipped down to the whole $0.50. I'm not sure how I got down there, but so this is really important. Now, a lot of people, well, it depends on your type of trade. A lot of people use the convergence, divergence, the MACD in different ways, and there's all kinds of tons of videos how to read it. And now there was a custom indicator made again originally for large cap, but as it turns out, it works for everything with the different EMA crossovers here, 9, 20, and 6, and then rather than having to read the histogram at the bottom, you will see those sometimes moving up and down to a line and, you know, showing you bars. Yeah, I'm sure you know what I mean if you've used the MACD before. This has arrows and alerts. So this one is a lot easier for traders that are trying to get alignment, you know, with a whole bunch of different things. They're trying to get alignment, and they want to make sure that they don't miss something by on the chart looking. So now it's right in your face, right where they're looking. There's going to be an arrow and an alert. Now the arrows for the MACD on this particular indicator are white, and they're going to usually tell you which direction it's about to go. When I say usually, I'm using that term of 75, possibly up to 80% accurate. You could always be getting that 25 to 20% inaccurate moves. So you just always have to be prepared based on historical data. So rather than spending a long time figuring out how to read a MACD, guess what? You can just go by the arrows, and it also takes a lot away from having to worry. So let's just take it out for a spin and look. So here the MACD kicked in right at the ATR level and said, you're right, it's going to go up. You see volume back that up, and I don't know what multi-chart alignment was. Multi-chart alignment, at least on the 1 minute, was definitely up at the time. But anyway, it said we're going up, so it went up. Now there's another indicator that said when to get out. Here it is again. The white one says it's going down, and it already was going down, but it continued to go down, and then it said, uh-oh, we're done. We're going up. Now this is a different indicator. We'll talk about that in a minute. That's the buy-sell oscillator that showed the red arrows here. So it's the MACD is just showing you direction, but they're always white. This is to stop from confusion of too many indicators, and you're not remembering which way the arrows go. So the MACD isn't going to see it's using these different levels, but basically the EMAs for crossover. So you know when you leave the area of a crossover, it's not going to kick in again until you got right down in here. And it is different levels, and that's why you don't see it crossing over on these levels. So these levels are going to tell you about crossover all on their own, right? The 9, the 14, and the 20. This is going to tell you a faster crossover, the MACD, and that's why it's programmed and coded that way. So this is another really, really good indicator, and these arrows are going to tell you which way to go. This one said go down when it was here, so it did go down. Then it said go up, a little late, but it went up. This one said it's going to go down. It went down. So every single one of these was accurate, right? Some were a little behind the times, but they were all accurate. So you know you're running 100% right here. It's not telling you how long it's going to go a direction, and that's why you need to, well, you can be using historical data. We're going to talk about that, but mostly you need to look at the other indicators. Are you near the whole and half dollar? Are you near a change where the vertical lines are showing you there's a new 5-minute or 15-minute or 30-minute? You know, what is the momentum in the volume? And you're also going to look at the level 2 if you're trading smaller stocks, and the time in sales if you're trading other stocks. So that alarm was this alarm that just went off. The buy-sell oscillator actually has an alarm. The MACD does too. It's a different sound. The buy-sell oscillator has like a phone ring that tells you to go. Actually, I'm not sure. I think they both have alarms. Yeah. But anyway, these again this is telling you the buy-sell oscillator. It's going to turn around. But you'd want to look. It's not quite as accurate as the MACD, but it's a good thing to have. You just have to kind of, again, line up your data, because these were both right to a point. Like this candle right here went up, and it told you it's going to go down, and it touched it. And then this candle said, hey, it's going to go up from here. So it's kind of like they're both right it went down before it went up, so that's why they're telling you now. I'll just go into, we'll talk about the buy sell oscillator in a second, but so the MACD crossover with arrows and alerts is amazing, and that is why he has it on his chart. He wants all the help he can get to make big money. Okay, let's talk about the buy-sell oscillator now. This is like an indicator video, but it's basically about the layout and how professional traders trade. So the buy-sell oscillator is using overbought and oversold conditions with the relative strength index. So it's a different way it gets its data than the MACD. So why not have other data? Oh, I restarted and this thing's not up here anymore. Why not have other data, right? So that's what this is going to give you. So let's take a look at that. So the buy-sell oscillator is going to be the red and green arrows. They do not have labels. Neither does the MACD. They're just going to give you directional alerts and alarms. So you're going to want to take notice. They're a little less. They're more like 65 to 70% accurate, but that's better than 50% accurate, guys. Again, you could always be on the other side of that 50%, right? So, you have to assume things are going to go against you. That's the safer way to do it, but then just try to line up as many indicators as you can, right? So this said it was going to turn around, and it hasn't yet. The multi-chart alignment said it's not going to turn around. This is happening live as we're speaking here. So, I would look at this. I'd look at a lot of things. We haven't talked about the scalping indicator yet, but I look at this indicator a lot. It's when I said I was going to talk to you about an indicator that was the most important indicator, it's this one. So we're going to be to that in a minute. But now, as the volume is it increasing or decreasing as it comes to that next 1 minute, right? So we're 40 seconds away from hitting this level, and the other traders are they're going to be short biased. If you were going short biased, you look up at your target here and say, hey, maybe I'll just go in and go down 4 cents with this and take my profits. Look at all the last candles. Only 1 out of the last 9 was up, and there it is. And everything else is down. So right now, this buy-sell oscillator has got more data against it, and it seems like you might not even want to wait for it to cross. But when it crosses, if this volume is climbing, most likely this is going to have a bigger move down. So let's take a look. We got 3 seconds, and now everybody's trading over here on the these, but it went up right away, so people might be taking profit. This is again why you can't be 100% on anything, but it was lining up to go short here. So it did not make it to the top of that, though, so that would be concerning to me. And we don't have this indicator telling us that it's going down, but typically this one is, every example isn't going to be perfect for you guys. Okay, so it is going down. It just took a second. So there it goes. And the data did say that's what was going to happen. So this was wrong, and that happens. Here it probably went up at first, then came down, then went up. So it was right, and then here, I thought I saw another one here. This one, again, it could have been going down and then up, down, and then up. You just don't really know. I love it when these are more definitive. On this stock, they don't seem to be working quite as well. But that is another indicator that didn't get the best review from me right now, but I use this as well. Most professional traders will use it, or they'll keep an eye on their RSI separately. I used to have mine on the 5-minute chart just as it was, that showed when it was too much buying or too much selling, and it would tell you when to go the next direction. I mean, it would infer that it's time to you're overbought or you're oversold, and it's just more data. You're adding up the data. You're never looking for every single thing to align, or you will never get a trade. Maybe in a perfect world, they'll all say, we're going up, but you're looking for more of the ones going one direction or another, and then you call it out, and then you be careful, because it could still go against you guys. Okay, so let's talk about the momentum directional indicator. It has a 12 next to it here. So this is a pretty popular tool. It's so simple, but again, it doesn't, the trader doesn't have to go back and calc these things and look at these things. It's going to tell you right away, based on 12 candles back, based on your time increment, is it breaking above or below the last 12 candles? When it does that, an arrow comes up showing you the direction that it's breaking that 12 average of 12 time increments back, and saying, hey, it's making a move, you should go back, you should move backward, move whatever direction it's saying to go. So let's take a look at that for a minute. Now this one is going to be in, there's one right there, and look, it's just conflicting with itself, so it must have been a while. So if you go back 12 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, so it's like right here. Yeah. So it's kind of went back and forth at it, so the arrows told you both ways. So they're telling you that there's some indecision here. Now, a lot of people use this at the open after 12 minutes, and then they just kind of watch it for the next half hour, 45 minutes, however long they trade the open. It can also help you because it'll show the pre-market breakouts too. So, but it does not hurt to have this to remind you that you're sort of at a waypoint from a 12 time increment. 14 is supposed to be the most popular. This is giving you a little bit quicker data. No, man, not the 6-minute ab, the 5-minute abs. But yeah, it's a lot of times the indicators are like, that's a joke from something about Mary. A lot of times the indicators are, they're just trying to get a little quicker for you, especially for scalpers. So that's how that indicator works. It's pretty accurate again, telling you, short term which way to go. And these have the kind of the brownish, bluish, markings here. So it did say it was going to go down, it went down. All right, then it said it's going to go back up, it went up, it went up. Well, that was the buy-sell oscillator there, and then it went up. And then buy-sell oscillator said, no, we're going to go down. And then a MACD said, we're going to go up. It's like if one indicator misses it, the other one helps you. That's why some people may say, oh, the indicators don't mean, stop following indicators. You see all those commercials? It's like, well, have you ever followed one? Obviously, they're just trying to sell a product. I understand. Everybody's trying to sell something. But the best thing to do is just look for yourself. Just see for yourself. And, they work. There's just, in my opinion, is they work, but not all the time, guys. All right, let's move on to the next. Okay, so this is proprietary right now, but I'm sure the $1 Million Margin Club will have it out for the prop firm. But this is a dashboard that's specially made for this trader. And again, I think that what's going to happen eventually, this entire layout with all of its indicators will be available. It won't be cheap because you'll be getting them all. Or, like I said, if you already have a bunch of these, you can just download this layout that I'm going to give you here, and then decide, then it will populate the ones that you have, or bring your studies in. And then, eventually you can get the rest if you want them, or you might not want them all. But let's go over what this is exactly here. So that is just these 3 labels. It's taken away the rest of the dashboard readings that were typically on the dashboard that you're actually getting for free today. So, and he doesn't care about the other stuff in the middle of a trade. He just cares about this stuff. Ask, bid, and spread. And I think I might have said that already. So that's what that indicator is. So when he's looking at this chart, well, let's go over the last indicator, and then we'll have a recap of this on this chart. Okay. So the last indicator on this chart is down in the lower. Actually, there's 2 of them. We've gone over the multi-chart alignment already, and he has his own band for this right here, right? But this is also a proprietary one for this trader. So he paid to have changes, to have it done just the way he wanted to have it. So let's get a look at this scalping indicator and talk about why this is so important. I'm trying to see what is actually different here on this. I think it might be that I think it's pretty much the same one, and it's labeled so he remembers to put it in his. I don't think this is different than what you just got. So what is this incredible, amazing indicator? Okay, this is an incredible indicator. So basically, if you look down at the area down here first, you've got the blue bar is representing the entire column. The blue column is representing the entire volume up and down, right? Inside, it's showing you the buyers and the sellers. There's a mathematical formula. It shows you how to do it. And if you want to understand, it's if you go to the $1 Million Margin Club on their website, it literally, as you scan down, all of these indicators have their formulas, which is pretty handy. And you can, understand if you have questions before you buy it, how are you getting the data? But I can tell you that this indicator, which I created, first I used to use the seller's indicator that would only use the sellers that I created. And then I finally created, with help from an actual subscriber originally, how to do the buying and selling. I've evolved a lot in ThinkScript since then because I would code, but I didn't do this kind of coding. So now I still love the suggestions of subscribers, but for the most part, I can handle it. But now that I've said that, every once in a while, I get to this indicator that will not work, no matter what I do on ThinkScript, and it just basically comes down to the platform. That's another subject. So the greens represent the buyers, the red represent the sellers, the blue column represents the volume. Then up here, you have another feature, a couple of things. You have the EMA crossover lights up on the 14 EMA. When it crosses over, it's going to light up with the VWAP. So let's see, is that what's happening? Yeah, the EMA is the pink line. Oops, I don't see it lining up. Where's the VWAP? That's way the heck down here. It should just be green all the time. I don't know. I guess it just flashed off. That's all. It didn't change. For some reason, it flashed off. But yeah, we are totally way above the VWAP. So this is telling you that it's a longer term trend, right? This information down here is giving you short-term data, right? Inside a 1 minute candle, what are the percentage of buyers versus sellers, inside there, right? So that's really important. And then you want to add that data to what was the last candle strength versus this candle strength. So not only do you have more buyers coming in percentage, but the volume went up. Well, here it is here now, but the volume just closed. But the volume went way up from the last volume, giving you a lot of information on getting into that move. And now you can see there's been a reverse. The buy-sell oscillator turned you around. So now you look for these EMAs to see, will that help? And everything else in the entire market, we're going to get into some other ideas about how they trade. But, I antiquate this. I think I might have said it earlier, to you being on a surfboard waiting for the wave, and then you jump on as you see these percentages climb. You jump on, and then you get off. Always trying to be biased the direction it's going in case you get stuck in a move. And then you read the other indicators to go along with it. It's not, once you understand what the indicators are doing, telling you what to do, it's not rocket science because they literally tell you which way to go. And that's one of the reasons why. I mean, look, there's a lot of stress in trading, even for pro traders, right? They're trying to make their nut a certain amount with their hotkeys and da-da-da-da. They can't think of everything all the time, or sometimes you get like a little brain cloud, you get confused, and it's like you're not quite in the zone. That's when you should stop trading. But the indicators that have alarms that go off and arrows that say like, dude, you're going this way, remember? It's just an amazing thing to have, is to have this layout that they have, and they spent some bucks for it, but you can get it back in a day easily, and then maybe times 10, if you are trading a share size that's like 500 shares like I just had on here a minute ago. Before you know it, this would have been $1,000, $2,000, $3,000, maybe $5,000 if I was trading this stock today, which I didn't today, but it's way slow now. But when it was done earlier, I'm sure that the volume was way higher. And he traded it. So he saw it, he traded it, and then we just talked about it before I started going into this. But so yeah, this is an amazing, amazing indicator. Now let's talk about some other stuff that should give you a leg up to make some money trading. So we kind of touched on this already, and that is the ATR levels, and they're explained by you go to a day chart, and this is a day. Oh, that's the news. Sorry. Let's go to a day chart here. And this is an indicator I'm going to be telling you about. It's not. It's hard. It's not actually something you can get yet, but it's pretty cool. This has been used for a while in other places. So if you are getting, this is your ATR, your average true range over a 14-day period, meaning that every open and every close over the last 14 days, Wilder's formula, a mathematician, right, is taken into account, and then that average is smooth. They're averaged out, right, and then it tells you how far you should expect the price action to move in dollars and cents based on that data. So if we look at the day before today, go over that candle, then read over there, $3.52. That's why normally I would not trade this stock. It's too low. But that's what you should expect it to move. Well, what the ATR indicator does here that is different than this one on the screen here, it's different than this. What the ATR indicator does is it divides this number by 2. Right, so if I go back over the candle, you can see you divide it by 2, right, and you'd get like $1.76, right, if you divide it by 2, and then you would add that amount to the close to get an ATR high, and you subtract it to get a low. So let's see how it did it here. So so basically it doesn't have the labels. I showed you the labels earlier, and I took them off this because he doesn't have them here. I was just showing you what it was. But it does mark the labels, and they become support and resistance levels based on what the range people expect this stock to move, right? It's just that simple. So it's a pretty handy one. You can do the calcs and draw the lines, or you can just have the lines done for you really easily there. So now it's outside of its range, but and it's only on this 1 minute chart but you could bring it in on any chart. Or if you drew these lines yourself after you get the level, then they will be on every chart. That's a different way to handle that. All right. So that's what the ATR levels used for the RV strategy. Day Trading Volume 1, I highly recommend you get that book. I'll have a link to it. That's the one that made all the millionaires and still is, and it's a great strategy. So that kind of took the ATR levels to a whole new level. I say that levels to a new level. Okay, let's talk about the time and sales and the level 2 on this layout and why they're so important to traders here. Now, this is the time and sales. He actually has 2 time and sales up. And we talked about that. This is for the faster, smaller cap, micro cap stocks, right? And what he would do is he would hide these 2 things. So now when you're looking at a time and sales, it's after the purchase of the stock has happened, or the sale or the purchase, after the action has happened. And then these are telling you what did happen on those, right? How many shares, actual shares. You don't have to multiply these. Now, you've heard me say before, all the data isn't here because people play shenanigans to get around showing you all the data, or they drop block trades later on, and they have SEC says, to protect front runners from seeing when they make big trades. And if you're in another country and you're trading on the exchange, sometimes you get a delay of 1 or 2 days, before you have to report when you did. So for the most part, for the purposes of using this, it's going to give you what you need. I just wanted to get that out there. It's just like the level 2 is most people think now it's less than 50% we get to see. But that 50% is usually enough to figure out what's going on to make your trades, right? Now, there will be all kinds of argument that data is differently, but we're going to move on. So why would he hide these over to the side, the time and the price? Well, I'll tell you why, because he knows that information without having to look here, and he wants to focus on this. And he really wants to focus on, yes, share size is the first thing. Is the second thing. The first thing is how much red is going by and how much green is going by when this stock is really cooking. Right now, it's very slow for the size of it, right? So he'll do something like this right next to where he's trading, right? And he'll see if he sees like tons of green going through. He might look at the share size. Are those all just 7 shares? Or are those 400 and 500 and 1,000 shares? And he just sees it go. And then that's going to tell you that the more green, that there's going to be a short-term climb upward if it's all green. If it's all red, it's going to show you a short-term downward. So that's why you want to look at this time and sales when you're doing momentum style trading. So that is the same thing with the level too. You're looking at these, you multiply these by 100, all right, and you're looking how many are waiting down the pike for these different prices, and they're going to tell you if you have a large amount, like 3 digits across, you have to multiply that by 100, and when it gets to that price level, you may see an abrupt turnaround, or the volume might pick up, right? And between the bid and the ask, you might see that the price doesn't change, but you have a big number right there, and then the number starts to go down. And the bid and ask are kind of doing this, but the price isn't really changing. As you see that price go down, as you see those shares go down, right when they get close, you got to time it like right. It's about to, the stock's about to jump in price because there's no more shares at this price. They're about to go down in price because there's no more shares at that price. And that's momentum trading, guys, and it can be it's definitely risky. It's not necessarily good for those of the faint of heart. Because you're waiting for that. You're trading well over 1,000 shares, and you're trying to make 3 cent, 10 cent, 15 cent moves and make that kind of money quickly. And you can make $100,000 in one trade, or steadily make $100 to $200 to $300 a trade with that kind of trading, and you can also lose it. So you need to stick to maximum loss per trade. This really helps too, because now that you're looking at that too, and then you're going to look at your target, and you just want to go for 4 cents if you're going long, and just don't, 1,000 shares, 4 cents, boom, in and out, So that's not a bad trade, and you just wait for the next one. A few minutes later, wait for the next setup. You're seeing here, as all the things we talked about, there's a doji there, indecision. This is going to break in 30 seconds. Right now, everybody says long. Look at that. The scalping indicator is 83% long. However, it didn't go to the very top, so it's a little sketch there. You got to worry about that a little bit. But you would say that, hey, if it goes more than 3 cents down when I jump in, I'm just going to get out. But if it looks like if it goes 5 cents up, I might just take my profit there. We're going to talk about how you look at other things too. But you'd also be looking at this, if you saw a lot of red right when it was about to flip, which is right now, it's kind of in the middle. Basically, it should go up. That's now you see red, so you got to be careful. But the volume for the sellers was lower on that doji, but it did show that they were more powerful. And so now it's kind of like, I'm not sure I would have taken that trade, just because of how it had all this indecision just before the 5-minute. See these couple of dojis. Gravestone, a hangman or a doji right there. So you learn your patterns. That's in day trading volume 2. They rate them. Yeah, this went down instead. So now we didn't get any of the crossovers happening or the RSI. No arrows told us. Nothing helped except we were outside of the market magnet range, these green arrows. So we didn't really have a lot to go on other than I would have been worried right there that the multi-chart alignment wasn't enough, and rightfully so, because indecision right here. That's all. It's just nothing's 100%, and I'm not Monday morning quarterbacking. As I saw this and tried to say it was going long, I looked at it more and more, and I'm like, I don't know about that going long. So, but anyway, so that's why he has this time and sales over here. Now the other one over here, he would use more for large cap, and he might have not so much the time, but he might have these prices in along with it, and then he would just reduce this out of his way, and he doesn't have to, he can switch stocks. He doesn't look at this as much over here, right? He's just looking mostly for, wow, everything went straight down there, huh? Jeez, I saw nothing but red. That was interesting. The buy sell oscillator said down too. It does appear that that should go down, judging from this time and sales there. But anyway, look at all the red going through. But you know, that's stuff that already happened. So it's technically already made that move. You're always trying to trade with the crowd, and then you're looking at patterns, and you know, this here almost made a bull flag, except it went more than halfway down on your 5-minute. So what else does he have up here? So that's the two different ways that he uses his time and sales. So let me reduce this one because we're going to look at this next chart over here. Now, I didn't talk about the active trader a lot. Hopefully you guys, you know, understand how that's the, you know, your bid and ask and buy and sell and on. This isn't a complete trading tutorial, but I'm trying to go over what he has here. So let's move on to the 5-minute chart. This video is so long, guys, that it turned into a weekend before I finished it for you, but I'm going to get it out today for you, today being a Saturday. So I wanted to touch on the 5-minute we just talked about, what is on that, because we kind of opened up everything else. I've noticed that one of the indicators I wanted to talk to you about doesn't show up well on the 5 minutes, so on the weekend here. So let me open up the 15 minutes so I can talk to you about these 4 little labels right here. That's the QQQ, the SPY, the TLT, and the UVXY. The TLT meaning the bonds, and then the UVXY is the fear index. So people have asked me many times, how do I look at these at the overall market as I'm trading live? Well, I don't that much. Occasionally I will if I'm switching stocks, but once I start, since I'm doing such a range gap and I'm seeing the action happen right in front of me, I'm not often worried about that because it's not always accurate. Like if I'm trading NVIDIA and the SPY goes down, NVIDIA might go up, you know, so it's not always accurate. But yeah, it's not a bad idea to keep an eye on it. Earlier on, I did used to do that, and then when I got so focused in just such a small area of time, like I was saying, it didn't work that well. But I am not normal that way. So the professional layout that we've been looking at, and then most of the traders that trade in the prop firms will keep an eye on those bigger moves all the time to see how it's for them scalping. What does it look like? So an indicator was developed some time ago because it was specifically asked for that to be seen without having to open up the chart. So again, everything in that one little area in the moment you want to see, right? What's the overall market doing? So these are the 4 telltale signs. I did make a video about how to guess which way see which way the market's going every day before you start. And these are the four of the 6 things you would look at. It used to be that the SQQ and the QQQ were something you would look at, but you don't really look at those much anymore because that's kind of died out. The market does change over time. Before COVID, it was a lot different. Then it got really a lot different after COVID. And now with this new tariff thing, it's just a whole new way to look at the market that we're still trying to adapt to. Most of the strategies, you know, still seem to work, like the open strategy and day trading volume 4. It has like 5 of them there. The RV strategy, day trading volume 1, the escalator strategy, you know, freestyle trading. That just adapts to any kind of strategy that you're trading. So, you know, you can, and my point is things move and they change. So you got to kind of always look for the latest way to adapt. You never stop learning. You never stop being inquisitive. But on this one here, I highly recommend getting this generally to have it. I think they're finally going to put this out. It's something that's only been available till firms, but it's not one I can offer for free because that was sold a while ago. But that will probably be at the $1 Million Margin Club because they know I'm going to be mentioning it. They said I could mention it. So most likely that's probably available. That doesn't hurt to have that. Now, we already talked about the capital margin and all that stuff. I'm pretty sure we did anyway. This has got your, if you're worried about, maybe we didn't, if you're worried about margin, like you're going to hold overnight for swing trading, which most of these guys do not, they're going to see how much capital they've used, because most of them are leveraging at least 4 times. Well, at least 2 times. Overnight, you can leverage 2 times and not worry about margin, but in the day you can go 4 times. But they don't want to hold something into a swing where they're paying interest over a long period of time, so they're going to want to use only what's in their account. Maybe. I mean, some people do it all the time. They don't care. They just pay they think they're going to make enough money that they'll go ahead and pay the margin fees. But also, you just don't want to get a margin call if the stock goes against you. If you only traded what your capital is, you can never get a margin call, because it can never, it would just, your account could go to zero if the stock went to zero. But that's the only way that could happen if you stay within your range, if you know what I mean. So anyway, there is an indicator that's for people. This is, again, especially adapted. And just to show him those 2 numbers, it's interesting he has that up. So I think sometimes he will swing, and then these help with that too. And then on the 5-minute chart over here, what else is very handy is the ADX the MMC ADX crossover with clouds. Now, this is giving you trend alerts. That's why it's on a 5-minute. I often see this on a day chart as well. And this is when a trend is about to form, when it goes above the 20 here, the white line. And then it is a trend when it's above the green line. Right now it says no trend, so the label will be white because it's below here. And it shows you the strength of no trend. These clouds actually show you the strength. I would go to the Trader Toolbox series to find out everything there is about this particular indicator over the $1 Million Margin Club. They have how it all works, how the math works. It just that series, the Trader Toolbox. Watch those videos. The other thing they have over there that's a lot of fun is the John Bull Bear candlestick pattern challenges over there, where you try to guess which way it's going to go based on what you see. It's a good thing to learn, like in day trading, volume 2, the Candlestick Pattern Playbook. It's adapted to kind of promote that book, because that's the only book that rates them. But anyway, that is a lot of fun at that channel. But that Toolbox series is a lot of fun too. But I want to make sure I pointed out this indicator, because it is a pretty it's a pretty handy indicator for 90% of traders. I don't use it. I probably should get into using it more, but I see that everybody over there at this firm uses this. So, and I know people have been asking me all the time about whether I use that or not. And I know that we have next coming up is you're going to want to click on the next video coming up, because I didn't get into support and resistance too much on this video, because it's going to be ridiculously long. But there's one there that's called the Professor's Top Layout. And not only does that show you how to build a layout from scratch that can be used in many, many different strategies, but it also, near the end of that video, goes in depth into support and resistance and trend lines, and you might want to look at that. And of course, I have a lot of videos on this channel that go into support and resistance, and I had mentioned that I was going to go into historical data, and that is what that is. Historical data is support and resistance levels, and I will briefly just touch on it. If we'll open up this, I keep thinking I have a day chart down here on my normal thing. So just briefly, you're looking for areas where the price action, excuse me, stopped and turned around, like right here, stopped and turned around. And that would be an area where if it came back to that, see how it did that, then it came back and then rejected, then it came back and then it rejected it, kind of did it, it kind of broke through it here, it finally went through it. And you might mark it again here. And then you see how often those levels get respected over and over and over again, when you mark those areas. So like right here, that was a dip. And then you're also looking for lower highs. You know, as this is going down, you have a lower high, a lower high, a lower high, a lower high. It's just kept telling you it's not ready to go back up. And then here you have, you know, you're getting back to the higher highs, you know, and then it's a higher high over here again. So now it's on its way back up. And then you would look at these levels. So there's a lot of videos about that. That's a whole 1 hour video. And then trend lines, again, it'll be covered in that video, but you would start a trend line in an area here. And you're looking for touches as you try to go up on the chart here. Like where does it intersect again here? So there, and then right here is a whole bunch of spots. I probably would have marked this to see it on the way back down, to see if it was going to respect it. And then you can have it up here too. You can do it the other way, where you can go down and mark it like that and try to get them marking down. I mean, again, this is not in depth about that, but I did say I was going to cover some of it. So, but that's the whole thing about historical data, whether it be 1 minute ago or 5 years ago, taking note of it to just so you can see when you're looking at other indicators, is it reacting? You know, is it reacting to that level? As you get to it, does the volume go way down as you're going up right when you're about to hit one of those levels, you know, and you're like, hey, nobody wants to push it through that. So get ready to go the other way, take your profit or go short if it had been going up. Guys. Well, anyway, thanks for watching. Get on that other video, and hopefully you can utilize this layout and make some good money, guys. All right? So I will talk to you soon. Always stay inquisitive and go green out there.